Half of the world's population lives on less than $7 per day, and 648 million people, or 8% of the global population, still live on less than $2 per day. Imagine if you're one of them. How do you put food on the table? How do you deal with emergencies? How do you pay for doctors when your child gets sick? How do you buy a home? How can you afford education for your children? How do you save some money for yourself when you can't work anymore? Some of you may think that many of these people are barely surviving and just relying on international charity aid, but that's actually false. You see, a lot of these people, even those living on less than $1 a day, rarely consume every penny of income as soon as it is earned. They manage their money by saving when they can and borrowing when they need to. They store their savings at home or with banks, they join savings clubs, savings and loan clubs, and they borrow money from neighbors, relatives, bosses, or moneylenders. If you're poor, managing your money well is absolutely central to your life, even more so than middle class or rich people. I know it's really hard to imagine how people can do all of this while earning less than $2 per day. So, that's exactly the question we're going to answer in this video. There are a lot of things that we can learn here, not just on economics and finance, but also about resilience. These people, after all, are among those who suffers the most hardship in life, yet they are able to make the most of their own situation and sometimes even live happily with the little things that they do have. This is how the poorest of people lives and grinds every single day. Okay, so the research about how poor people manage their money that I'm referencing actually came from this book titled Portfolios of the Poor, written by several World Bank researchers who themselves tracked the finances of 250 poor families from India, Bangladesh, and South Africa for about a year. The book itself outlined several overlooked but key problems that these poor people face on a daily basis. First of all, when I say these people live on $2 per day, doesn't mean you exactly earn $2 per day every day. It's just an average over time. You make more on some days, less on other days, and sometimes you make no money at all. A lot of these people work informal jobs and had limited to no support from the state. Your greatest source of support is your family and community, but mostly, you're on your own. This makes survival itself extremely hard, because not only you earn so little to begin with, but you still need to save a chunk of it, as there will be days when you earn nothing. You need to smooth your consumption over time while also saving for emergencies and putting food on the table every single day. Now, the authors of the book also mentioned that pretty much all families that they interviewed were complaining about the service they get from traditional banks and insurance companies. Among poor people, there is a massive need for a reliable instrument to save money for emergencies, invest in their business, or pay for education. But high barriers to entry meant that a lot of poor people tend to rely on informal services like moneylenders, for example, that are more accessible, but also charge extremely high interest rates and have a higher likelihood of being a scam. Okay, so with these problems in mind, let's look at 3 real-life examples of how these people live and survive. A bit of disclaimer, $1 can buy more stuff in Delhi, Dhaka, or Johannesburg than it does in New York. So, the incomes of these people may be bigger than you think. Although in our case, these people are all considered to be poor even by the standards of developing countries. The first story is about a couple named Hamid and Khadija. The couple married in the poor coastal village of Bangladesh, where there was very little work for a poorly educated and unskilled young man like Hamid. Right after their son was born, they gave up living in the village and, like hundreds of thousands of people in Bangladesh, moved to the capital city Dhaka in order to find work and settled themselves in a slum. After a series of jobs as a construction worker and many days of unemployment, Hamid, whose health condition was already poor to begin with, settled himself as a reserve motorized rickshaw driver, driving this thing right here. Meanwhile, Khadija, his wife, stayed at home to raise their son while also working as a seamstress. Their home consists of cement block walls and a tin roof, and they share bathroom and kitchen facilities with 8 other families. On average, the family earns $70 per month, or 0.78 cents per person per day, most of it earned by Hamid. But the family income depends on whether Hamid got work on that day or not. He was only the reserve driver after all. And if he did get the work, his income depends on how much business he attracted that day, how many hours he worked, and how many times his rickshaw broke down. Out of the $70 income, 20% is spent on rent, not always paid on time by the way, and the rest is spent on food and daily necessities. They are not exactly the poorest of the poor, but they are still in the bottom 2/3 of the income ladder by global standards. Now, you might think a couple with no education, trying to raise their child while living in the slum, are just living day to day without any financial plan. But that couldn't be farther from the truth. The family has money built into 6 different instruments. See the left side of the column right here. They have $30 sent to their parents at home for safekeeping, $40 lent out to a relative, $16.8 in a microfinance savings account, $76 in a life insurance policy, and Hamid always made sure he had $2 in his pocket to deal with anything that might befall him on the road. They also have $153 worth of loan to a microfinance company that Khadija took out to buy gold, a secure, reliable asset that she could use in the event Hamid could no longer support her. Although, the fact that she took a loan for this meant that they are paying to save. Khadija even became an informal banker of sorts, keeping money for their neighbors who wanted to hide their money from their spendthrift husbands, for a fee of course. If you look closely, their balance sheet has a negative value. This is actually rare even among the poorest of the poor. But in Hamid and Khadija's case, their debt is quite manageable. The amount of debt is small relative to their monthly income of $70. A big portion of the debt was used to buy gold anyway, so it's only a liability in accounting terms, and the small weekly payments made it manageable. Khadija said this herself to the book writer. "I don't really like having to deal with other people over money, but if you're poor, there's no alternative. We have to do it to survive." Khadija and Hamid are both illiterate, so all records of transaction are kept in their heads, and it's all 100% accurate. She said, "We talk about it all the time, and that fixes it in our memories." The second story is also about a couple living in Dhaka, Bangladesh, named Subir and Mumtaz, who had 5 children, all of them sons. When they both first arrived in Dhaka, they were pretty much penniless, and they lived in a slum area nicknamed Fire Slum because the area had burned down so often, making it extremely dangerous. They built themselves a simple hut with woven bamboo and a few sheets of corrugated tin as a roof. Fortunately, this also meant that they had no rent to pay, and their only utility expense was a single light bulb. Their bathroom was a local water pump, and their toilet was a public one set up by an NGO. Like Hamid, Subir also cannot find a stable job and finds himself pedaling a rickshaw, an extremely demanding job that only the very fittest of people can do week in, week out. Like most men, Subir can only do this a maximum of 4 days a week. On good days, he earned about $2.5 per day. But that depends a lot on how much business he attracts that day, as well as the weather conditions. Subir's teenage son Iqbal, meanwhile, found work in a garment factory that earns him a stable $27 per month. His younger brother Salahuddin earns about $6 per month by rag picking, or literally, garbage pickers. And Mumtaz, Subir's wife, worked part-time as a maid, earning about $10 a month. Taken together, their total income peaked at $3 per day per person and could fall as low as $1.9 per day per person. Making this unstable income and turning it into a stable home life was extremely hard for the family, but most of the time, they've succeeded. They never had to beg other people for money or food, but they did skip meals. Sometimes they ate just rice, other times they had a bit of fish with it, and on rare occasions, even beef. They usually ate twice a day or sometimes ate only once a day during bad times, but at least they ate something every day. And it's a tribute to their hard work that they've managed that. These two stories of Hamid and Subir's family gives us a deeper look at how poor people live their daily lives and what it takes to be able to survive every single day while also taking care of your family. Now, the third story is not about the daily lives of poor people, but more about how they deal with unfortunate situations. This story is about Tembi, a 50-year-old woman who lives in a South African township. Her monthly income is $169. She receives $114 from her disability grant and earns $55 from her part-time job. This might sound a lot compared to Hamid or Subir's income, but it's still way below the South African minimum wage. When her brother died from tuberculosis, Tembi was solely responsible for the $1,413 funeral expenses. This amounts to 7 months of her income for a single funeral. Why so expensive? Well, because of the fact that funerals are very important in South African culture. Long before her brother died, Tembi actually held memberships with an informal burial society, a kind of insurance but for funerals. But it didn't cover the whole cost. She also belonged to a savings club, but she didn't have enough savings to cover the expenses. Tembi then patched together additional interest-free loans from her relatives, but still fell $92 short. She thought about applying a loan from a bank, but her lack of steady income meant that it was likely to get rejected. So, rather than stressing herself by visiting the bank, where she would most likely be rejected anyway, she took a loan with 30% monthly interest from her cousin's savings club. She then spent the rest of the year trying to pay back her loans. She paid back the burial society loan within 2 months, but failed to pay back her family or the savings club by the end of the year. This story shows how Tembi was able to deal with a large expense such as a funeral. She didn't entirely succeed, as she didn't pay some of the loans on time, but her options were very limited to begin with. These 3 stories show that, contrary to popular belief, the poor are not passive victims of poverty, but active money managers who use various strategies to cope with their low and irregular income. They need flexible financial tools to smooth out consumption, save money, and access credit when they need to, but the formal financial sector often fails at this. The book authors suggest that in order to improve the lives of these poor people, we should not only try to raise their income, but also get them better financial tools. Things like microfinance that can provide small loans, insurance, and a savings account for small businesses and low-income earners. Or things like mobile banking that can increase the outreach of banks to the poor and enable them to participate in the digital economy like most of us do today. This is Doverhill, and see you next time.